Thank you for coming. My name is Ron Brown. I use HGSI software. I am a user. I'm not an owner of the software. The developer, I should say, is a man named George Roberts, and Matt Sorrells is the single programmer, so it's a small company. But I think you'll be amazed at this software when you see what it can do. The software's been around since the early 90s, but it has evolved to the point where it's an extremely powerful software based upon the top-down approach to prospecting. But it's not limited to that. You can use it just as a scanning program to scan for individual stocks, or you can go to more work and do the top-down approach, which I'm going to do today. I have not looked at the markets today. I've been traveling, so we're going to look at this together, and I'll just show you what I do every day for my work. But somebody in the audience asked me how I got involved with my former partner, Ian Woodward. Unfortunately, Ian passed away over Memorial Day. He was 84, and he was a real innovator when it came to technical analysis. But he and I got involved back in 1998. I went to a seminar in Houston, Texas. He was putting it on, and I just went up to him and I said, I'm thinking about retiring, and I had no idea what I was going to do, but I'm sick of working in the corporate world. So we talked a little bit, and then when I went back home, and my home is in Lincoln, Nebraska, I was working with a marketing company, and we were building websites early on in 1998. I knew nothing about it, but I had a lot of young people working for me that knew exactly what to do. But I put up a very limited website using some of Ian's techniques, and I sent him the link, and he wrote back and said, God bless you, and why don't you come out to a seminar going to hold in Palos Verdes, California, and just sit in on it. So that's exactly what I did. And I actually burned some CDs using the program. I was using the software then on how to use the basics of the program. And I didn't get involved in the presentations that time, but I came back to the next seminar. And Robert, were you there?
I was there all the time.
Robert Minkowski was there all the time, and that's true. But anyway, I did a short presentation at the next one, and I was not used to public speaking at all, so it was pretty intimidating for me in a room of 50 people, because I thought they knew more than I did, but that really wasn't the case. So it just evolved from there. So that happened 17 years ago, and we did these seminars on location in Palos Verdes, California, twice a year, sometimes 3 times a year. And we had between 40 and 55 people attend each one of them. And it became kind of a boys club, actually, because the same people like Robert would come back over and over, and we established a lot of really nice friendships over the years, and people were making money using the software. So anyway, that's how I got started. And how did I get started in this crazy business anyway? Well, back in 1983, when I was freshly married, I had a stockbroker, my wife and I did, and I wanted to buy some more stock of a company called Royal Dutch. And it was doing very well at the time, and my broker talked me out of it, and the stock continued to go up. And I said, well, I think I'll just get involved with this myself and learn how to do it. So I bought a stock from a little company called Brit Oil. Anybody ever heard of Brit Oil? And I put a few $1,000s in that, and I ended up making $40,000 on that trade, which was a lot of money back in 1983. It's not so much money now, but especially here in San Francisco. Anyway, that's how I got started in this business, and then I just became real curious about it. Metastock had just come out, and I thought, geez, you know, with this software and those indicators, this should be easy. I should be able to make a lot of money doing this. But I found out that really wasn't the case. Now, indicators come and go. There are many of them. I pay attention to very few of them. I become more price and volume based. In fact, that's pretty much all I look at, plus support and resistance. I use some moving averages now, and now I'm into what is called risk-based trading, where I define my risk beforehand. Robert, you took that webinar. Were you able to get through any of the stuff yet? The material?
No, not yet.
I know you weren't. You're too busy. But I'm going to do another one that's going to be a lot better. So anyway, I'm going to get started. This is Thursday. The market's been closed for a few hours, and I'm going to use the software and just show you the process that I go through every day. When I'm doing, I do a daily market report, and I get up at like 5 in the morning and do the report, and this is what I look at, because it really gives me a feel for what's happening in the market. Now, I know most of you will not do this because it does take some time, but you'll see that just by watching this presentation that you can learn an awful lot about what's happening in the market. So we're going to see what happened today. Now, unfortunately, I'm projecting this on the screen, so as I'm recording this on my computer, the images will be in a little bit from the edges, but the presentation will still be fine. So the first thing I do when I get up, I run what we call, or I call, a group inclusion report. Now, what the heck's a group inclusion report? It's a report that includes stocks which are created, or this report is created from stocks that are in what we call smart groups. Okay, so actually let me bring up a slide here. There are people in the room that don't know what I'm talking about here. These are some things that are non-HGSI users, but these are some things that I am going to discuss. The first one is a GIR, or a group inclusion report, and this is made from what we call smart groups. And smart groups are merely filters and something called a combo ranking, which is made up of fields from the program. Now, this all sounds kind of complex, but it's not. So I'll generate the report. I'll show you what it looks like, but the smart groups are just filters with the best ones coming to the top, and then the groups are truncated, and that gives us a list of stocks. And then I'm going to talk about the 10-period volume point of control. This is something I came up with. Matt, the programmer, actually put volume point of control in the program along with VPA, which is volume price analysis, which are both extremely useful tools. And I was looking for a trigger for short-term trades, so I started experimenting with the 10-period volume point of control, and that's what I came up with. If I have a chance, we'll talk a little bit about box stocks too. That was something that my partner, Ian Woodward, came up with many years ago. And it is a method of watching stocks that have varying degrees of earnings growth. There's box 1 through box 10. Now, I may or may not get into that today, but if I mention the word box stock, box stocks, it has to do with stocks that are showing consistent earnings growth, okay? Now, that is all you're going to see as far as a PowerPoint slide. Everything else is going to be live here. I just updated the program. It is a program which requires a nightly download, or you can use it as a intraday prospecting tool also. It uses delayed data, 15-minute delay. So I think that's pretty common among these programs like MarketSmith. Is that 15-minute delay? I don't know if it is or not. I don't use it. I also want to mention that one of our primary users of HGSI software is a guy named Gil Morales. I don't know if you're familiar with Gil or not. He is a very well-known trader. He and his partner, Chris Tasher, have written, I think, 4 books now. And they used to work for the O'Neill organization, IBD. They were traders for them. They've gone on their own. And Gil has dropped Wanda and Market Smith. Wanda was costing him $25,000 a year. Market Smith, I believe, is $1,000 a year. He dropped both of those and is using HGSI only. So we have some of Gil's indicators in this program, the pocket pivots and so on. But he's one of our biggest advocates just because he's making money with it. I talked to him the other day and he said that this is his 4th year in a row that he has consistently made money with the program, and I think he's up about 60% this year. So, and nobody would complain about that, I don't believe. But anyway, that's enough of a commercial right now. Let's get started with this. I'm going to show you how I make that group inclusion report. And where it comes from are these smart groups. Now, if you look over here on the left side, can you see these? They're green up here at the top. These are smart groups. These were created from filters and a combo ranking, and I'll show you what those are in a minute. But what I came up with 2 or 3 years ago, maybe just 2 years ago, it hasn't been too long. I thought with all these smart groups that are generating suggested trades, why not combine all of them, and then the ones that are showing up the most, the stocks that are showing up the most, let's just look at the top 50 stocks, and that will be our basic prospecting list for the day or the week. So that's what I've done. Now all you have to do to make this work is you click on this arrow up at the top, and then I click load selection, and I can see that I need to go up another level here. I go into a folder. Now once you do this, it'll stay in this folder. I just I had to get there. But I'm going to load this. It's called the Top 50 Group Inclusion Report. And what it's doing, it's going into the program. I've already updated the program. It's going into the program, and it selects various smart groups. You can see the smart groups with the checks beside them. Those are the ones I'm using. They're mostly Woodward and Brown, but there are smart groups from other people. Like Jeffrey Scott has Dave Steckler, David Gallardi. I believe those are the only ones right now. Robert, we don't have a smart group for you yet, do we? Why don't you give me one? Okay, so I'm going to go down to the bottom and click on Make Group from Report. I'm going to change the date to the 13th since that was the market day today. And I'll just click on OK. And then I need to go back up to the reports page. It should have been on there already, but I'm going to run this report. And if everything's working correctly, I'll get an HTML report. And I'm going to move it over to the center so you can see it out in the audience. And what we have here are the stocks based upon the number of appearances in smart groups. These are all of the smart groups over here, and that is the group that the particular stock is assigned to. And you can see that NetEase appeared in 14 smart groups today, including the application, or the group is up here, application software. That is one of the 14. So it appeared in 13 groups today, and you can see the names of these smart groups. Unless you're an HGSI user, it probably doesn't mean anything to you, but this one's self-explanatory. Consistent earnings growth, box stocks, I just mentioned box stocks. It appeared in that 52-week high retrace, which means it hit a 52-week high within the past few days and pulled back a little bit. Demand short term, that means that it had to have a positive force 2 and 13. That may not mean anything to you either. Those are a couple of indicators that Dr. Elder developed. We use them in a different way, though. We don't use them like he does. And anyway, I'm not going to read all these, but here are Morales and Tasher smart groups. So NetEase appeared multiple times, Grubhub, Court, TBRA, and so on. And all 50 of them go into a folder. Now I'm just going to go to that folder that was created, and we'll talk about this a little bit. There they are. It truncated the group at 50, and I want to find the view that I use. It's this one right here, and when I sort on raw combo, now can you read that? It's a little bit
No, it's fine.
okay. When I sort on raw combo, it applies that combo ranking that I've been talking about, and it's just a single field. And that single field is the industry percentage price change one day. And what it does is it lines these top 50 stocks up according to the group that moved up today the most. And if you look at this column here, the industry percentage price change one day, you can see that the airlines group was up 1.86% today. So this is what happened in the market today. The airlines have been a terrible group lately. What does this tell us? It tells us that there is some money flowing now into the airlines. And the second one, Samantha and I have written one representative, one, and then integrated utilities, 3 REITs, healthcare facilities. Another big group here is exploration and production. Oil must have been up today. There were 3 biotechs, some infrastructure and application software down here. So some of the tech stocks you can see are included in that list today. So that tells me that there were some buyers in the techs today. Now yesterday we had a totally different picture. There were no tech stocks in there yesterday. So we're seeing some rotation back in tech today. And I get all this information just from looking at this group, or this view sorted by industry group. Now if we go over here, and I'll use my mouse since I'm recording this, and look at some other things. Here is this column right here. It's the VPOC 10-10, which means that trigger that I'm using to the upside or the downside, it shows if it's positive or negative in the days since it fired. Now Alaska Air Group, that fired 9 days ago. So that means some money has been flowing in to the airline group. But that fired 9 days ago. So this isn't the first stock. I mean, there are a couple, what I'm trying to say is there are a couple of stocks that are leading that group now that fired several days ago. Now let's bring Alaska Air up. And I'll use just, I want to go to a different chart here. And this is a chart that I've been using because it contains many of the elements that I like. Down here at the bottom, of course, we have volume. This here represents the volume point of control, 10-day, both positive and negative. When it's green, that means that the bulls essentially are taking over. So down here at the bottom, this hammer down here indicates that the selling was over, and if I click on that dot, if you look up here at the top of the screen, it says stopping volume. It normally indicates that the selling pressure is over. Bearishness is, the end of bearishness is nearing. So every one of these VPA flags in this program if you have a chart with the information on the screen, it tells you exactly what those signals are. And I'm using this VPA more and more because it really works. It doesn't work all the time, but you tell me anything that does work all the time. But if you want a feel for what's going on, it really helps them. It had to come down here, and this volume is really truncated here because of this volume spike over here. That's why we can't really see much volume on it. But if I zoom in on that and get rid of that spike, now we can see the volume bars. And you can see right here that come back over here and put my mouse on there, that volume, this hammer right here, coincided with this heavy volume right here, which means there was a lot of fear in the market at that point. So people that were hoping here that it was holding on, you can see there was a little bit of buying here, but then these two yellow dots indicate that there is a lot of selling pressure, and there's a tremendous amount of fear. Have you ever held a stock like that where you just say, get me out of here? Anybody done that besides me?
Yes.
Yes, okay. Well, that's what that's telling you right here. But the problem is, there's a lot of overhead resistance here. So you generally, you don't buy them down here. It's hard to. You like to see some backing and filling, and then here was a test for supply over here. Here's a shakeout, and then the group started going up again. Now I want to show you another chart on here. It's the same chart, but see this black line that's on here now? A dotted line, that represents the industry group. So that's every airline stock combined into a group. So when we talk about top-down prospecting, we are looking for stocks that are moving together as a group, either up or down. And I came up with a term many years ago. I called them wolf packs, because stocks are like wolves. They run in packs. I mean, it was just something I said, and Ian liked it, so he picked it up. And but it's true for the most part. Not always true, but stocks have a tendency to move together as a group, and that's what we see here. Now I'm using moving averages here. These are 18, 50, 100, and 200-day exponential moving averages. I didn't really do much of this in the past, but I'm doing this more and more to give me a real feel for where the price is relative to the moving averages and if a stock is trending or not. And you'll see more of that as I go along. So anyway, this is one of the stocks in the top 50 group inclusion report. Now, I haven't seen much in the way of airlines recently, but I keep a history of these group inclusion reports. And I'm going to just take the time to show you this. I'm going to flip through back to the designer, and I'm going to put ALK in here. And I'm going to click over here on this folder on the right side, this manila folder on the far right side. And what this is going to do, it shouldn't have done that. It's going to go through and show me in the left column every time that this stock has appeared in the top 50 GIR. Now you can see back in March, there were several appearances because airlines were strong then. But recently, there has been nothing, really. October, today, in April. We haven't had anything since April. But now it's reappearing in this group. So that's a handy tool, because you can go back and you can, if you keep a history, and this is a manual process, most people will not do it. But it takes me about 5 minutes to keep this history. And there are other groups here. stocks and groups moving to the upside. Now, here is an earlier clue. This is a smart group also, and you can see that this started appearing back on October 10th. In this, October 4th, I'm sorry, in this group. And what's the date today? This is on 13th. Okay, so 9 days ago, this group started appearing in this other smart group. Yes?
Do you run every smart group every day?
It does it automatically.
Okay, all right.
Yeah, so, it's Sean, it's really not that big a deal. But what I do is I manually drag these down to create my history.
Okay.
And that way I can go back and see where the stocks began to emerge and so on. So if you keep an eye on this, and I'm going to go through the process. I don't want to get too bogged down in this.
John, I just have one question.
Sure.
Put in the ALK there.
Yes.
On the left side, on the user group, do you have to be on the GIR or?
No, it can be any stock.
You just put it in a little envelope and it will tell you everything on the left column.
Right, okay, yeah, okay, let's do NTES, okay?
Oh, yeah.
Okay, NTES, it was the top stock today. Now over here on the right-hand side, that little manila envelope, if I click on that, it's going to go into my database and it's going to show me all of the smart groups and all of the other groups that this stock appeared in and when it appeared. So if we go up, let's go down to the top 50 group inclusion report, and you can see how many times NTES has appeared in our smart groups. I mean, this is crazy. That's VPA. Okay, this is just for this year, all right? This is 2016. It first started appearing in the top 50 GIR back on February 16th. So let's go in and take a look at February 16th on NTES. And I'll just, so February 16th, I went too far.
That was right after the market bottom.
Okay. I'll do an alternate C for a crosshair. I'll do an alternate I, which brings this up. And what we say this February, what did I say, February what?
16.
16th? Okay, it appeared on this day. First appearance was, where's my mouse? My crosshair. Oh, right here. Right here. So the first appearance was right here, it shot up and then it collapsed again, okay? So let's see when it appeared after that. And you can see what a beautiful run this stock has made over the months. So,
It's up almost 100% since February 8th.
okay, it really started coming in May 4th. So if I go to May 4th, which is right there, on this day, where this crosshair is, that's where it started appearing again, just as it was starting to make its big move up. Now remember, this is the top 50 group inclusion report, so that means that stock was appearing in the cream of the crop that early in the run. So you just have to pay attention to this, and look here. Look at all these green squares and the rectangle. The rectangle confirms strength after a no supply signal. This is a test for supply down here, but it shows you right here that this stock was under accumulation because the smart money wasn't letting it go down anymore. They were absorbing everything that was being sold here. And then the program picked it up right over here where the crosshair is. So this is why this history is valuable. And for people that take my webinars, I give them all this information, I keep it up to date. Anyway, it's a very powerful tool. Over here, let's talk about some other things on this chart. This is what's called a moving average fan. When they're fanned like this, the 200 is in the bottom, then the 100, then the 50, and then the 18. And notice how this stock never really got below the 18 other than right there, where it dipped down, and as soon as it did, buyers came in and snapped it up. When you see a fan like this, when it's starting to form and spreading out, that's a good indication that this is going to be a long-term, strong stock. Doesn't always work, but if everything's lining up and the moving averages are starting to spread apart, that means that the momentum is to the upside. You see it in the candles, of course, but it's just a confirmation. And you can see down here that the VPOC 1010 that I talk about, volume point of control, turned green back here before, well, right here, just as it was making its move. This candle here is called an effort to rise, and you can see that the volume point of control turned green at the same time, which means that the bulls were coming into the stock. Now, if I get a chance, I'll break this volume point of control down for you a little more. I mean, it may not make any sense to you, but you know, this stock didn't go straight up, obviously, but let's go to the
view with the industry group.
Yeah, that's what I was going to think. Here's the industry group. So the group was going up, and the group came down a little bit. This is not the scale of this group here. You just look at the lines of direction, the dotted line. But you can see that the group fell starting right here, and it came down, but it didn't even get down to the 50-day exponential moving average. So it was holding up. And after this effort to fall right here, look what happened. We get a no supply VPA rectangle right there, and then it started moving up again. So this has been one of the big winners that has been showing up in this report, not day after day, but multiple times. And it's a good example of this report working. Now let's move on. I don't want to spend too much time on this. Yes.
Could you do the reverse and look at the bottom 50 and see the same thing kind of to the downside?
Well, I don't have that many smart groups, but yeah, I could, we could set it up.
Okay.
I do have some smart groups that.
I was just wondering, depending on which way you look.
No, you can do it. Sure. In fact,
DTV would probably be in that one, right? You see what that did this week?
No, I didn't have.
45% it went down on that.
Okay, Sean, let's take a look. Let's see what I do have in here. I'm going to clear this. I'm going to load the selection. Here's weakest stocks. I guess I did build one a long time ago. I don't even know what's in it anymore. But let's run it quickly, okay? It's only 4 groups, so I'll just call this weakest. And let's see what comes up in it. And we'll do 50 here also. No, the program is extremely flexible. You do anything you want with it, really. I mean, and I'll guarantee you can't do this with any other program. Okay, so what do we have here? It comes up. I don't have the industry groups selected for this one, which I should. Let me go back and run this again. I'll just show you how I make an adjustment here. I just selected those 4 groups, but I want to add the industry groups, and you can see all of those are going to be selected now also. Let's run this. I want to make another group of it. I'm sorry, I don't have to make another group. I can use the same group, but this HTML should give us the industry groups. Let's see if it does. Okay, it did. Okay, so what I did is I went in and just selected all the industry groups that we have in the program. And you can see base metals, generic pharma, investment management, trucking. They're all over the place. So let's go ahead and put it in that number 11 view. And I need to get back down here to October. And I don't even know if it gave us 50. It didn't. Yes, it did. Okay. Now, these are, I'm sorted on that raw combo again, and then this shows us the stocks in this group. And you can see there's private equity, investment management, 3 of those, managed care. Yeah, kind of mix and match. But look at the red over there on the right side. That is the information from what we call ERG. It's earnings growth, relative strength, and group strength. And if everything's red, it means that they're pretty bad stocks. So yes, to answer your question, you could do this, and I don't do it, but it's certainly easy to set up. Let's just take a look at one of these stocks.
So when you do the GIR report, you're really looking for clusters of stocks.
I'm looking for
And
wolf
best
packs.
of
Right.
in the cluster.
That's right. So when you see, for example, semiconductors during this rally have been very, very strong. They finally sold out a little bit recently. But that's where the strength has been, and you'll see in that GIR report that semiconductors have pretty much dominated it. And then, you know, when the beauty of this, let's just look at one of these. Well, that's a garbage stock, but let's look at Avis. You can see that Avis was a relatively strong stock, but it's kind of fallen on hard times recently. And if I open up the fundamental panel, you can see that the earnings per share rank is 11, relative strength is 12, which means that it's compared to all of the stocks in the database, it's down near the bottom 10 percentile. And that's just because it's been rolling over. It responds fairly quickly. But yeah, if you want to look for stocks like this.
Ron, to show the power, maybe put in Momo or Acacia to see when that first started showing up.
Okay, now Acacia's probably not going to be in, but let's do Momo. Okay, Acacia, I keep a special IPO group.
Okay.
And Acacia was not assigned to a group right away. So let's do Momo, okay?
Yeah.
What's Momo done the past few days? I don't know.
I think it rallied.
Here, I need to turn this off.
Momo?
Momo, M-O-M-O. Oh, see, I didn't deactivate that, and it's looking for M-O. Okay, you want to deactivate this folder first before you put a symbol in. Okay, there's Momo. Now let's see if it comes up over here. Unless I type more than I should. Okay, here's Momo. So once again, looking at this, it started showing up top 50 GIR. The initial appearance was back in February, and then there was a nice run in April. And then in August, it really started showing up again, August 1st. And August 1st was right there on that effort to rise flag. This blue or cyan circle in the center of a candle means effort to rise in VPA, volume price analysis. So it caught this stock just really at the prime point. And look what was happening here. A test, the yellow one is, I believe, a no. I'm so dependent upon just looking at what they say here. It's an up bar closing near the high. Oh yeah, that's right. That confirms the prior day's test. So it's a 2-day signal, okay? And then the green is a no supply, a sign of strength. So all of those are showing up. You can see that the moving averages were lining up. So we were in a consolidation period right here, or contraction. There's contraction, and then there's expansion. Here's your contraction, here's where your expansion starts. And that was really a low-risk trade if you would have caught it, especially back here, because you're not risking much money if you have a close stop. So you can see why I like these VPA flags, because they alert you to things that you may not notice. Matt did a really great job putting this code into the program. Okay, let's move on. Let's see what happened in the market today. Is that all right with you guys?
Absolutely.
Because I don't have a clue. Now what I do is I run that GIR first, and then the next thing I do is I go in to my smart groups and I look at these stocks and groups moving to the upside. And the way I do this is I go up here and click on this pie chart, and then I drop down to the industry. Why can't I see it? It's up above me, that's why. And this pie chart shows me out of 100 stocks that are going up based on our combo ranking where the strength was. Now, REITs have been really weak lately. Has anybody noticed that? I just know this because I do this every day. You know, I see what's weak and what isn't. So it's showing me that money is flowing into REITs all of a sudden. Look what's number 2, airlines. We talked about that. That confirms what we saw in the top 50 GIR. We also saw 3 REITs in the top 50 GIR, right? So I just look at the big pie chart, or the big slices: exploration and production, midstream, rail freight, application software. Most of these showed up in the top 50 GIR. This is a confirmation that these are the stocks that are starting to move. Now, one thing that's nice about this, I'm going to make this a little bit larger, is if I want to, let's go into exploration and production. I'll just click on this. The slice is highlighted now. And if I click on one of these stocks down here, it should bring up the chart, unless it's probably behind here. Let me minimize that. Okay, there it is. And now this is not a stock that I would be interested in, because it's too loose. I mean, there's no conviction in this chart whatsoever. But it just shows me that there are some people starting to buy these stocks. Now, another thing you can do, if you get into that group, you can right mouse click on this, the stock up here, and you change to the industry group, and then I can just click back to the warehouse, and it's going to show me every stock in that group in the warehouse. Now, if I want to find some stocks that are moving, I have all kinds of options. Let's do the...
And are those ranked by relative strength once you're in the group?
No, these are, I'm still on that combo ranking. These are all ranked on the group. That's why I'm going to go to something else here. So let's go to volume point of control, stocks and groups. These are all the stocks that have a positive volume point of control. And I should stop and explain that to you right now before we go any further. But these are the stocks that are showing signs of bullishness. And also, here are the last VPA signals, and this column to the left of it shows the number of days since a VPA signal fired. So Okay, I'm sorry, this is the days since the VPOC fired. Yes, this column's correct. This is the days since the volume point, I'm sorry, the VPA fired. If it's a 0, that's today, and that's that internal resources we looked at, but the volume point of control fired 10 days ago. Let's see if we can find a decent looking stock in here. Now, here's another tool we have. It's called the ranking module. And let me make this smaller so you can see it on the screen. We have the ability to just throw all of these stocks into this ranking module, and we have different ways of ranking it. This is currently on Ian Slow. Now my partner, my former partner, who passed away, he came up with this many years ago, and this ranking method was pretty much, well, he did it to try to have something similar to IBD, essentially. So it's based upon the last 6 months with 70% of the emphasis on the last 3 months. Am I giving you too much information here? Okay, so it says that Resolute Energy Corporation is the top stock in this group. And you can see that, look at the relative strength of this stock compared to that first stock we looked at in the group. Tremendous. Look at this basing period. And then when it took off,
500% was down to 5, and now it's 30.
This is contraction, and then the expansion starts. Look what happens when the expansion starts. Look how that fan starts to form. And it rides that 18 all the way up pretty much.
Why do you think 18?
18, 20, very little difference. I've read a book by a guy named Frank Bunn. He teaches course on the Udemy or Udemy, however we pronounce it, I don't know. And the guy makes a lot of sense. So I was using the 22. He uses these. Gil uses different moving averages. But these seem to work very well. But you know, it's your choice. But it went from this and started expanding. And at this point, right here, it was turning into a long-term, powerful trade. And what did you say it's up, Robert? How many percent, approximately?
500%.
500%.
5 to 30.
Okay, now this is a stock REN. You want to go back and look and see if it started appearing. Take the time to look at it in the designer or not. You know, type the symbol in and see when it appeared.
No, it's
okay.
No,
you get that idea. Okay. But
Ron, maybe you should just point out that there is fundamental information at the top of the chart.
Okay, yeah, that's true. We have this fundamental panel, which you can turn on and off, and what it contains are the last 8 quarters of earnings and revenue, and also the percentage gains or loss. And I want to point out something that's very important. Most IBD people, the cancerous, will not look at a stock unless it has very highly ranked earnings, is what I'm trying to say. Look at this. Look at this EPS rank. 11. Stock movement really has very little to do. In many cases, I'm not going to say always, in many cases with earnings. Look at this. This quarter, the most recent quarter that's in here, was down 275.4% compared to the same quarter 1 year ago. And yet this stock, why does that happen? It's because they're buying in anticipation of good earnings to come. But anyway, I kind of follow one Canson board. I don't follow it very closely, but when there was rotation into the oils and the precious metals and so on, they wouldn't even look at that stuff. And some of those stocks were up 200, 300%. just because they don't meet that strict criteria. And by the way, a friend, an HGSI user, sent me an email from a guy that he follows that went to a William O'Neill concert, not a convention, conference, senior moment, sorry about that, back in the 90s, and he told his industrial clientele, the people that paid big money, he said it's more important really to look at the price and the volume than it is to look at the earnings growth. But most people involved in CanSlim do not really follow that because it's really not in any of the books. I mean, they have very strict rules. So that's something you really need to pay attention to, the price of the stock, pay attention to the group.
And its relative strength is
relative strength is much, much more important than earnings per share rank. Much more. And look at the group rank, 99. That's what's important. Forget the earnings. I shouldn't say forget them totally, but you know, you're going to miss out on a lot of trades if you have a very high need for a high earnings number. Okay, let's get back to the market. I'm still not at the market. I want to go back to my smart groups. It's under Woodward and Brown, and we're going to look at some more of these things. We're going to stocks and groups moving to the upside, but these stocks are in the okay, I need to get back to my number 11 view. These stocks are in the $1 to $15 price range. When I first put this together a year or two ago, I was doing it $5 and up. And then a guy got on one of my webinars, George Lee, you know who George Lee is. He said, what about the precious metals? They're moving, they're not showing up there. And that's because I didn't have stocks between $1 and $5. But that's where the action was. So I went ahead and built a smart group which contains 1 to 15 and then 5 and up. And you know what? If you combine those groups, you will, there may be an overlap of 10 stocks out of the 200. They just don't overlap. So anyway, in the low price stocks, look where the action was. It was in exploration and production, REITs once again, precious metal and mining, specialty farm. So I get a read on what's going up, and then I just move quickly over to what's moving down. So where was the weakness today? Marine shipping. Something's going on in marine shipping. I don't pay much attention to that group. Publishing and broadcasting, specialty pharma. That's such a big group, though, specialty pharma. You really have to take a close look at that. And then I do the same thing in the, let's see. Oh, I'm sorry, that was the 1 to 15 group. Now let's go to the regular group. This is $5 and up. Auto parts were weak today. Ag chemicals, semiconductors, devices, 4 of them. That's not a lot of stocks out of that group, but it just gives me an instant read on the market. So I've done the GIR, I've done this. The GIR confirms the upside, and then what I do is I just move down into what I call the Woodward and Brown user groups. These are user groups that Ian helped me some on these, but I put most of these together. And I call this the Major Markets Plus because not only is it the major markets, it contains several ETFs because I want to see where the strength and weakness was. Now I'm sorting on percentage price change 1 day. I always do that. And the VIX was up today, another 4.9%. But if you look over at this column right here, the percentage range, it closed at 30.39% of its daily range. What does that tell you? tells you that the premium was sucked out of the market as the market rallied today. Okay? So I always look at the daily range, the intraday range. These columns over here show you the trend based upon mathematical calculations. The VIX, the long, the medium, and the short-term trend are all up right now. You can see that the S&P 500 is all red. It's going down. That's based upon 40 days, 10 days, and 5 days, a 5-day moving average of those. It's just a mathematical calculation, but it gives you a good read. Now, where I go from here is I always go to the NASDAQ because that's the index that I pay most attention to. And if I can find it, I'm going to sort this way and then go back down. It was down 0.4%, but it closed at 77.26% of its daily range. What does that tell you? That it rallied. It rallied going into the close. I mean, I can tell this just by looking at this, and you can too. I mean, so let's bring up the chart, and here's the chart that I use for this every day. And you can see that it bounced off of, I'm sorry, this is the NYSE, NASDAQ. Okay, we're in no man's land here. I'm on my daily chart. I bring this up, and what this does is it allows me to look at a bunch of information in short order. I know this is kind of hard to read out there, but I can see the advancing stocks versus the declining, 1,734 decliners to 629 advancers. The ARMS index, though, is below 1, which means that there was some buying in selected issues. Anything below 1, it means that the volume in some of the stocks was heavy on the buying. I can't give you the calculation right off the top of my head, but anything below 1 is good. Now, that's pretty good on a down market day. But was this really a down market day? Look at the candle over there on the right. What does it tell you? It tells you that the market traded down pretty hard and buyers stepped in and it closed near its high. And that number is 74.48%. Now this over here is what we call a warehouse view. In a chart, you can use any warehouse field and you can build your own boxes with the information you want, which is very nice. And if I didn't like it here, I can move it over there. Now these down here, this is advancing issues versus declining issues. This is advancing volume versus declining issues. New highs versus new low, the ARMS index. You can whiten those boxes if you want to. I guess I should point that out on the screen too. Advancers versus decliners. This is the volume box. This is new highs, new lows, and the ARMS is down here. A lot of information right here, but the most important thing is what happened on the intraday reversal. And you can see that as of today anyway, I don't know if they're ready to let this market quite die. And then the next chart I go down to, this was Ian's chart. He called it his, what chart?
Water closet.
Water closet. Because
He was British, that's what they call him.
it just a little bit of everything is what it is. But the top indicator, this is one of the few charts where I use a lot of indicators. And I keep it in here because I look at it, and Ian used this a lot. But that top line up there, Robert was involved in the calculations on that. It's called the Bongo Weekly. If it remains green, it means the internal relative strength of the market is still pretty good. And it has not turned red yet. But the one down is the Bongo Daily, and you can see that it's much more volatile. Next one's accumulation distribution. The market's still in de-accumulation, but that's a slow-moving indicator. And then the next two are force indexes. they're both negative. And then the rest of them are related to Bollingers. Those are Ian's indicators. I don't, I'm not a big Bollinger guy personally, but they do, and I'll tell you why I'm not, because when you're looking for percentage moves based on Bollinger Bands, if the bands are already spread far apart, it doesn't really give you that information that I'm looking for. Anyway, but a lot of people find them really useful, so, that's just me. Down at the bottom are some other indicators that are used for the market. These are called Eurekas based on ARMS index primarily, and then these are based on Bollinger Band movements over here to a certain way. I don't want to get into detail on all that though. We just don't have the time to do it. And then this is a chart that I normally look at. It gives me the information. I look at the volume today. See, it's red. This means that it's running below normal still. With the 90-day, the 50-day, and the 20-day moving average volume is all below normal. Why do we use 90-day? The VPA signals are all based upon 90-day moving averages. So we had a reversal on low volume. The long-term trend is still up. The volume point of control is negative. Now let me talk about that volume point of control chart, because I think it needs some clarification. Okay, let's see if I have one here. You see anything that says buckets in it? Right here. Okay, let me zoom in on this. And let's do let's use NVIDIA. Okay, so what the 10-period volume point of control is, it is represented by the blue line here. This shows the history of the volume point of control. All it does is cover 10 periods. And those, the histogram on the right-hand side is 10 days, the longest point right here. Above the blue line is the actual 10-period volume point of control. Now the highest part of those 10 bars, that is the highest point that the stock attained during that 10-day period, and this is the lowest point that attained during that 10-day period. Whenever a stock closes higher than, closes higher than the prior day, it's added to the positive volume. When it closes lower, it is subtracted from the, and that's the negative volume. So up here you can see that the histograms are red in this area because the stock was going down at this point. So more volume was given to the negative side for the 10 period, and that's where that histogram is longer. So it started to drop, and then it actually went below, right here, it closed below the 10 period volume point of control, and it rose down here. So that means that just on those 10 periods only, the bears are currently in control of this stock. Does that make sense? It does to me just because I've been using it so long, but it's a good trigger point, okay? And that's really all you need to know. Now let's go back up here to these charts. I want to go through, see what the market did today. I'm going to go through this fairly quickly. And okay, we did the NASDAQ, and then I look at the S&P 400 mid-cap index, and you can see that it was relatively weak also, but look at this, it bounced off of that support line. Right? These support lines are based upon the zigzag indicator. They're drawn in there automatically.
What percentage?
Well, it's whatever you want to do, but these are based upon 3 lines with 2% sensitivity. You can make that anything you want to. I just use them for quick visual reference. But you can experiment around with them. They do a fairly good job. Anyway, the mid caps, you can see these trends are all down, but it is trying to hold support here. And then the small caps got hit pretty hard today, it looks like. This is the S&P 600. Down at the bottom, you'll see that pink rose line. That means it was a volume pocket pivot. It means the volume was higher today than the up volume has been over the past 5 days. These are 5 or 10 day pocket pivots. But once again, it didn't close. It closed at 48.93% of its daily range. So there was some buying that came in at the end of the day. What do you think the market will do tomorrow after what we've seen so far? I mean, we don't know. Nobody knows. But it isn't dead, is it? I mean, I don't think it's. I think
But there's been several days of significant distribution.
Yes, there has.
And the rallying back has been on weaker volume.
That's true.
Selling.
That's true.
So that's of some concern.
But on this one, the volume was heavier today, but it was mostly negative volume. So, I mean, it's a dangerous time is what it is. I mean, that's the way I look at it. I think it's, you really have to be careful. Let me go to just and I'm going to run through the rest of this stuff quickly. I want to make sure that you see the whole process. Anyway, what do we see today? We see the VIX was up. We see gasoline was up. Miners were up. This is the column I'm looking at right here. Commodities, oil was up. We knew oil was up because the exploration stocks were up. You can kind of see how it all ties together when you start looking at it many different ways. I'll go down to the next group. These are all ETFs, and it's a mixture of ETFs. I get a little different view here because natural gas is in here. We're starting to get into the winter heating season. For one thing, natural gas is starting to go up. Blue is a big oil guy,
Yeah.
So anyway, that's where money was flowing today. Gasoline, utilities. So some looking for some return. We saw the REITs also. The REITs are beaten down, and some of those REITs are yielding pretty darn good, dividends.
I saw a piece not too long ago, just a few days ago. Carter Worth was talking about the REITs as a good safety play, and it's outperformed the S&P.
Well, they've been great over, but recently they've been bad.
Mm-hmm.
But now we're starting to see some flow coming back into. Now I couldn't see this flow unless I were using this program. Maybe there are other programs that do this. I don't know, but I don't look at anything else. Okay, and then the next one is these are all spiders. You can see S&P. Most of them have a spider in their name. So I just like to look at these two. Now the leading ETF here was utilities, and real estate. Global real estate, REITs, once again, it's all tying together. There's money flowing, looking for yield, relative safety. And then I go down to what I call my broad market indices. I change views, and this time I sort on advancers versus decliners because we get a totally different look here. You can see that the Dow utilities, all 15 of them were up, 15 to 0. And the utilities index, which is the utilities sector, 78 were up, 23 were down. Transports were less than 1 at 0.82. So everything else was negative on advancers versus decliners. So the theme we're seeing here is that money is flowing into utilities and REITs. Look what was the worst here. That is a risk-off trade.
And the small caps are also at the bottom there, number
Yes,
3.
right, and the industry groups.
Yeah,
Look at this, more than 10 to 1, almost, 28 losers and 2 gainers in the semiconductor index. That tells you that the risk trade is off right now. Now, if we go down into that SOX, and if I go back up to my prior view, I just want to look and see the range of these. Okay, now, this gives us a different perspective. Even though they were all down, look at the ranges of the top ones especially. You can see that NXP semiconductors closed at 90.59% of its daily range. So a lot of people were shaken out of these stocks today, and buyers came into them. Let's just take a quick look at the chart, and then we'll go back. Wow, darn it. Oh, this is a buyout. Forget that one. I'm sorry. I forgot that. But this one right here is a good example. Teradyne, a lot of fear in this the past few days. You can see that volume point of control is negative, but look at the buyers that came into this stock at the end of the day. Wouldn't touch it. But, you know, one day does not make a reversal. A stock like this is too loose anyway. You'd be crazy to trade a stock like this. Wouldn't you agree, Robert?
yes.
We used to classify, and I still do, stocks as tight, neutral, and loose. If they're loose, stay away from them. Unless, you know, you have a real long-term perspective or something on them, because you're just going to get whipsawed all over the place. It's just not even worth the effort. There's too many good stocks in there that are tight. Okay, so going back down to my demand-supply view again, utilities were the only ones that had more gainers than losers. Everything else was negative. Okay, let's go. These are just more indexes. I call this my focus view. All of these have 100 stocks or less, or they're supposed to. The NASDAQ 100 now has more than 100 stocks, but you know. And you can see that if the risk trade were on, the NASDAQ 100 would not have 2-to-1 decliners over advancers. So it just tells us the risk trade, once again, it's just confirming the risk trade is off. Now I can do this in about 5 minutes if I'm not talking to people. I mean, it seems like a long, tedious, drawn-out process, but it really isn't. Now here are, once again, these are sectors only. All right, same thing. Utilities on top, everything else was negative. Decliners over advancers. The next group I go down to, and this is what I finish up with, are the industry groups. It's going to give us a pretty similar message here. Utilities are on top. Precious metals, when there's fear in the market, generally, not always, they're going to go up. 25 advancers, 2 decliners. Cement and aggregates had a good day, 8-to-1. Airlines, we saw that. Here's our theme carrying through again. It's all tied together. 16-3. Look what's number 5, REITs. Yes.
Oh, so after you're done with your, you know, your 5-minute top market, top-down look, do you get to, how do you decide which, do you then go in and look at the charts?
Yeah.
Okay.
But I will only concentrate on, if I'm looking to go long, I would only concentrate on the strongest groups.
Mm-hmm.
Okay. Let me just finish this off quickly and then we'll do that, okay? But there's one more thing I do. I have what's called a combo that I use on here. These are fields in HGSI. And I weighted these years ago. I weighted the force index 2-day at 15.4%, the 13 at 10.3, white body or a white candle at 10.3, and then the others in less weighting. There's fundamentals in here, there's technicals in here. This thing has worked great over the years. And what it does when you apply it with raw combo, I'm going to go from sorting on advancing issues versus declining to raw combo. It is going to tell you where the strength is in the groups, and look what's on top. Airlines. Followed by telecom, resellers, ag, machinery, sporting goods. I mean, these are not risk-on groups for the most part. Well, they aren't. I mean, they're not the tech groups. So if I bring up the airlines group, even though this is a crummy looking chart, as of today, this group is where the money's flowing, where the strength is. We saw it in the top 50 GR, we saw it in the stocks and groups moving up. Now we're seeing it in the industry groups. So it all ties together. And then the final thing I do with the industry groups, I bring that spectrum analyzer back up. Now what this does is it gives us a snapshot of the information that's contained in the warehouse. So I don't want to go through and look at all this minutia all the time. I want a broad sweep here of what's going on. So I begin with, well, I have to load my custom indicators. They're in the slices folder. And I usually start with accumulation, which is right here, accumulation distribution. It's number 5, and this shows me a breakdown of the 174 groups or whatever we have now, and the accumulation, and you can see that the accumulation has gone down. It was over 50% the other day, and if I combine the two greens, A's and B's, it's I can't read it. Let me read it over here. It's it's about right around 39% for the two, and that has slipped dramatically. Now, if I want to see which groups are in A accumulation, all I have to do is click on the slice, bring this back down. This shows me the groups right here, which are maintaining their A accumulation. So you click on any pie chart, and it gives you the information without having to look at it in the warehouse itself. And then let's go down, let's load some more of these. I look at the percentage price changes on the industry groups. If it's red, means down more than 3%. Dark green means up more than 3%. And that information is right down at the bottom once again. So if I click on the dark green, power generation was up more than 3%. Not a major group. But still, it's just a nice snapshot. And then advancing versus declining. This shows me the groups that had more advancers than decliners, green, the ones that were neutral or yellow, and the ones that had more decliners than advancers are red. So clearly a negative day on the industry groups. And there's a few more that I go through. I don't need to really take you through them right now. It's on the website. If you want to go through my daily routine, it'll show you all this.
I have to access it. Looks like
Okay, well, thank you for coming.
a lot of information. Well, thank you.
You're welcome. Resume this.
Very elegant.
No, it does lead you to the same path. There's no question about it. And I'm not going to take you through the rest of these slices, but just remember the slices are showing you what's behind it. If this were a group of stocks, I have slices in there for relative strength, earnings per share. You can get an instant snapshot of the strength of something. And that's a whole different subject, though, that we can go, cover some other time.
But I think it's also important that people understand they don't have to do everything.
No.
You can do a few of the things that you do to get a sense of the market, and then they have one or two slices that they like, and bing.
Yeah.
You don't have to use the entire program.
No.
It's like
No.
going to the library. All you need is one or two books.
I have to know the entire program to teach it, though. And no, if
But that's for your benefit. I mean, you look at this, you say, wow, this is overwhelming.
Yeah.
But you can tailor it to your taste. I mean, it has
Start taking baby
everything.
steps, and then-
Yeah, and if you want to use the basic stuff, were you here when I was talking about smart groups? You can use the smart groups to get you started.
Yeah.
I mean, you can use the top 50, or you can go into the other smart groups to get you started. In fact,
Ron, when you do the stocks and groups moving up, does that include IPOs in that, or you have to do
No.
that in a separate?
those are stocks that are assigned to groups.
Uh-huh.
If they're assigned to a group, they will appear if they're moving. Okay, that is,
Because, as you said, Gil is using the program, so he must be applying stocks and groups moving up, but to the IPO fold.
well, he's just,
Because he
Gil,
likes these IPOs.
he goes through charts. He goes through hundreds of charts. And, he'll just look at all the IPOs. But he does use that stocks and groups moving up as one of his primary prospecting tools. He said that many times when it comes to our seminars.
He's the one who came up with, but he uses the pocket pivots a lot, right?
He is the
Yes,
pocket
he is the
pivot
pocket
guy.
Okay, that's, I
Yeah.
thought I remembered that.
Yeah, you should read his books. They're pretty interesting. And this guy has made tremendous amounts of money trading. He's a fearless trader, and he trades big numbers, and I don't think he does it so much anymore, but he would go all in on a single stock. I can't do that. I don't want to do that. But it's worked for him. But I don't think he does that as much anymore. Let me show you a few things that I just put in, and I'm going to cover these in my next webinar. I just released this for the newsletter, and I want to show you this because it combines several things. And let's go into all securities, and then we'll wrap this up. Because everybody needs a break, right? Okay, now
I love it when you make the program dance.
make it what?
I said, I love it when you make the program dance.
Dance?
Yeah.
Yeah, well, I've got a lot of experience. No, it's tremendous. I mean, I don't know what I'd do without it. Now, this is something, and this is going to fill in here with the intraday quotes from today. I just hit my F5 button, and what I wanted to do is combine VPA with the moving averages that I talked about and look for low risk trades, okay? So what this one is a test above the 1850, 100, and 200-day moving averages. Now, I'm going to, Allegiant, guess what's on top? An airline, okay? Let's just take a look at this. This just went out yesterday. I just put it together. And what it's showing here is this magenta square over here means that it was a test for supply. What happened is traders took it down this morning, and somebody stepped up, other traders stepped up and bought it. And it was a low volume test. So look at the volume here compared to the prior days. So that shows that there is no supply for this stock. As of today, that could change tomorrow. But today, they were not willing to let it go down. Okay? Now back in here, we were getting a no supply, effort to rise. Here's an effort to rise coming off the bottom, effort to rise. So, these signals were coming in, and people that are not using the VPA are really overlooking a lot of power that's contained in this program. Now, this isn't pure Wyckoff and so on, but it's an offshoot of that. And what it's doing, it's looking at the information that's provided in volume and price, and it does a very, not a perfect job, but a darn good job of interpreting. Okay, so that is why this one's coming to the top. Now, what I'm looking for are this one's in a consolidation or a contraction period right here. The contraction, you can see it around here, and if it breaks out of here. But what I did is I put this filter together with. I'll show it to you very quickly. I don't want to spend a lot of time on it. But if any of these conditions are met, no supply, customer supply, strength, high volume up bar, within a 3-day window, these stocks are going to appear in here. So I'm looking for stocks that are not necessarily in the expansion stage, but they are showing support within the last 2 days. Once again, here we have another low volume test on this stock. So,
That's a nice chart.
isn't that a nice chart? And let me show you one other chart, and we'll probably have to wrap this up, but we have why can't I see them? Because it's right in front of me. Okay, this is what we call a VFB chart, or a visual filter backtest chart. Whenever the conditions are met, and the conditions here are above the 18 and a test within a 3-day window, a green line is generated here. So this stock doesn't have a lot of times where it worked. This one doesn't either. But a lot of times when, let me just flip through some of these.
What's it called, the green line?
Visual filter backtest.
Okay.
It's just a visual backtest.
Okay.
But the conditions were met here and here. See, it was above the 18, but if you look at this, and the 18 is clear down here, and it's a congestion area. But up here, it's more valid because the 18 is moving up. And right here, so these conditions were met. There was one of those 4 conditions in the filter were met in that 3-day window, and the stock had a nice little run before it rolled over again. Over here on the far right, the conditions were met here, but it failed, and now it's generating again. This is one of those loose charts I was talking about, though. Stay away from them, for the most part. I mean, sure, you can get lucky sometimes, but why take on all that risk? Whoops, I want to go the other way. That's $1.35. See, there's a lot of loose stuff. Now here's a tighter chart. This failed right here, but the signals were there. So it just tells you when the signals were generated in the past.
What do you typically use for stop loss?
Well, that was a whole other subject I was going to get into. I don't use a hard number anymore. I mean, what I do is I base it upon, let's do this very quickly, okay? And now I want to show you this. And then we'll wrap it up. Okay, this might be, this is Apple. Well, that'd probably work, but. What's this? Neighbors Industry. That's in a.
Yes.
Yeah. I'm trying to find something here. Let's use this one. Stemline Therapeutic. Never heard of it. Now, this is a pretty tight chart here. This is tight to neutral. Look at this area here where the contraction is, and then it breaks out of there, and it takes off. What I do, Sean, and this is what I put together for my my workshop or webinar people, is I base my risk depending on the amount of capital you want to use. This is a 1% risk on capital. $50,000 means you're going to risk $500 per trade. But what you do is you measure the high and low price of the stock. Here's the high, the low, and the low minus 4 cents would be your stop. But when you put the numbers in here, here's the risk that I'm assuming on this trade. This is AMAT the other day. Let me move this over so you can see it better. I won't go to an actual stock chart. I'll just use these numbers because we're running low on time. Okay. This is called the risk game. This is that Frank Brown I told you about. This is what he does. And it's a great system, because the problem with system trading is that if you get a signal on an MACD, and for example, the stock's already up here, and your stop's going in down, clear down below, you're assuming, let's say 20% risk, that's a stupid trade. And it varies from trade to trade. You don't want to do that. What you want to do is you're going to say, I'm not going to lose over $500 on this trade. That's it. And you put these numbers in, and this spreadsheet will calculate your risk for you. So on this trade, had it been executed, and the buy is the high plus 2%, $30.23, the only risk I've got is 3.21%. The reasoning is, if it's going your way, first of all, you're going to take it off a pivot. And if it's going your way, you get filled, you use buy stops only. You don't go out and buy the stock. You put the buy stop in at this number, the buy plus high. I guess I should be doing this over here. And then if you get executed and you don't have slippage, if this comes down and takes you out, you're going to lose 3.21% plus a little slippage, plus your commissions, but you're only going to lose $500. Now, the beauty of this is you can sleep at night. The only way you're going to get hurt is on the gap down. I had one the other day, an idiotic brokerage firm downgraded its stock, So it went through my stop, and, I lost more than $500 on it. But those things happen. You can't
How
control
do you
them.
determine your stop?
Right here.
That's based on the chart.
It's based on this. Where is my stop here? You see,
You have the low.
right here's the stop. Right here. It's
below
minus 4 cents.
Uh-huh.
Because if the stock is starting to expand and go your direction out of contraction, the odds are better that it's going to keep going. We have no idea if it's going to keep going. But if it keeps going and you get down here to your target, here's your 1 hour target. Now, in this instance, it said to buy 515 shares. I only bought 500. I didn't take this trade, but I would have bought 500. So my risk is $485. It calculates it for you. But if you should set a target in here somewhere between 2 and 3, and then you can start easing out of this trade. Or you can hold it. Because some trades, you can get a 10R. If your risk is $500, but I bought 500 shares rather than 515, if I attain these targets, that's what I'm going to make on the trade. And what you do is you trail your stops up every time you reach a new target. You get to 1R, then you move your stop to break even.
Do you ever use volatility?
No. I like this better.
Well, you're choosing an arbitrary number of cents. It's the low minus 4 cents.
Right.
Maybe another stock, maybe it should be low minus 6 cents or low minus 1 cent.
You do not you do not have to use yesterday's low. You can use a low from 4 days ago.
Or
But,
last week's low, or
or
any low.
or you can use the
Because it'll be
low.
reflected in the risk, so you buy fewer shares.
Right, you buy fewer shares, but the problem is, the further away your stop is, the harder it is to attain the R levels, the reward levels. But that's the way I do it now. And as I mentioned in that email to you, I did this live during the webinars, and I was basing my profit on risk, the amount of money risked. And in 6 weeks, I was up 100% on risk in those trades. Now, I gave some of that back. It ended up about 60% on risk. It wasn't on the total amount of capital. It was on risk. Because what are you doing? You are risking a certain amount of money, and you're not risking your 50,000. So that's the way to really keep track of it. And it worked beautifully for me, but now when the market's gotten choppy, you know, it's tough to make a buck. I just closed what I had before I came out here. Because, you know, I was suddenly behind on some of the trades. Anyway, we better wrap it up. Any questions?
No, it's great.
Well, thanks. Well,